Okay, thank you for tuning in to this live session. So it is the 5th of June 2024. So let's begin on the dollar index as always. You can see I'm on the daily time frame at the moment. What we're going to do, go to the monthly time frame and look at this from a higher time frame perspective to begin with. As always, we can see that if we remember, this 12-month imbalance was reached from the monthly time frame, and then we actually broke these highs to the upside. Okay, now one good thing as well we can see is the fact that on the weekly time frame we broke these highs right there. So we had a high, a low, lower high, lower low, and then we had that break of structure right there. Price then came into a discount and we formed that internal bullish structure, okay, which is more visible on the daily time frame more than anything. So going to the daily, we can see this blue dot structure here. So we have the low, the high, the higher low, the higher high. You can see price is now within a discount of this bullish daily leg. All right, so obviously what we want to be doing is buying low and selling high. So buying in a discount and selling in a premium. This is something that we've been speaking about for quite some time now. So what we'd want to do is find areas of, I guess you could say, support, whatever label you want to put onto it, within this discount zone, within this discount area. All right. So number one, what we can see is we have this daily demand zone, this daily candle. So this is where the orders were basically built up before moving to the upside. So this area has a lot of value in it, and also this area took out that low right there. You can see I've just magnified that with the horizontal line right there, just to showcase a sweep, okay, of that low before we continue to the high. This is what we call a liquidity POI, so a liquidity point of interest, because it swept liquidity and then broke structure. All right, so price has come down into that very, very nicely, and we've had a reaction from there. Now, it hasn't done its job, so to speak, in terms of it hasn't sent price higher to break that. What it has done is it sent price up, it's come back down, we tried once more, and we failed to keep that bullish momentum intact. So what price has now done is come to the downside, and obviously we are here right now. Okay, we could use this once more, so price could be using this once again to tank to the upside. What I do like to do sometimes is go to the weekly time frame and even the monthly. Just want to double check that. Okay, so on the monthly time frame, we've actually took out the previous monthly candle's low. Okay, so I'm just going to highlight that with a horizontal ray, and I'm going to put on here, so PML, previous monthly low, right there. So prices took that out. So the reason why sometimes I like to do this is because when we are within discount or premium, price can sometimes use the previous candle of the monthly or the weekly. It can use the high or the low of that candle and then basically spring in the other direction, because what this is, it's another form of liquidity. Because people that would have gone long last month, they might have their stop losses below this low, below this monthly candle's low, which gives price, even more reason to take that low out before continuing with bullish momentum. Okay, so there is that showcase right there, or sort of a reason as to why price could react from where we are right now. So that's number one. Number two, that we are in a discount of this bullish daily leg, as we spoke about. I am on the weekly time frame at the moment, but it still is visible on the weekly. So that's reason number two. Reason number three, and trading, in my opinion, is all about building a narrative, building a story around your idea. As long as you can explain sort of how and why price can go to certain places and areas, then it should make sense to you. Okay, so that's reason number two. Reason number three is the fact that we're still within this daily demand. Now, although we have retested it, it's not to say that this won't sustain. Okay, it's not to say this won't sustain. What I'm also looking at as well, now we are obviously Wednesday at the moment, midweek, is if we go to the 4-hour time frame, the 4-hour time frame is actually bearish, okay? Highlighted with the fact of this red dot structure points. So we've got the high, the low, lower high, lower low, lower high, lower low. And the reason why we can sort of identify that this is a lower low is because it closed, the price closed below this low on the 4-hour time frame. So this is now the new 4-hour low. For price to go back to bullish in alignment with the weekly and in alignment with the daily, what I'd be wanting to see now is a break above this high right here, because this is the last 4-hour structure point. So for the 4-hour to now align with these blue dots and with these green dots over here, just letting price load up. These green dots are the weekly time frame structure, if you remember, and then the daily I've got in blue. And obviously this is internal structure. And something we need to remember as well, when we are pulling back into a discount zone of a higher time frame area, of course price is going to show bearish momentum, because it has to go bearish at least short term to get to that point. Okay, so potentially this is what price is doing right now. Okay, so yeah, like I said, I do like the fact that we've took out that previous monthly candles low. We're still within this daily demand, this daily liquidity POI, the candle that swept liquidity before breaking that. Look at that volume that came in after this day. Okay, so a lot of orders were building up within this day, and we broke structure again, not to mention the fact that we swept that candle's low. All right, and like I've just said, we have took the previous monthly low as well. So just to recap on the monthly time frame, we've got the previous monthly low as liquidity, so price has now taken that out. What we also do have as well, if we remember what we were talking about, is this 8-hour imbalance, which I'll go on the 8-hour and show you. So just scrolling to the left, you can see that right there. It's very, very visible. And it could be on the cards. It could be on the cards. So price could potentially use some sort of news event this week to maybe spike down. If we do want to continue bullish, that is, to then continue higher. Okay, if we are going to continue bullish from here, I would say that we would be ready to go from here, just because of where we've come into, the liquidity we've taken. It all depends on the fundamentals though, but this does align with the daily. Okay, but like I've said, the internal structure is bearish, meaning the 4-hour structure in this case. But again, as I've said, in order for price to have a pullback into a higher time frame area, it's going to go bearish on the smaller time frames, and the smaller time frame in this case is the 4-hour. All right, so that's just something I am aware of and keeping an eye on. So let's move on to euro dollar. Okay, I believe it's this chart with the drawings that I've got on. Let's just check this one. Okay, let's go with this one here. So euro dollar, let's go to this chart right here, FXCM. Oh, sorry. Let's go to the weekly time frame first and foremost. Let's go to the monthly. So again, similar to the dollar. So on euro, we've actually took out the previous monthly high of this candle. So what I'm going to do, I'm going to put the template on there. So PMH. Yeah, so previous monthly high. Again, it could be used as a form of liquidity to bring price back down, at least for the short term. If we now go to, before I do that, I'm just going to zoom out first of all. Remember, we've got this area down here. It is still left out in the open, and this low is still obviously hovering above this monthly imbalance. But at the same time, if we remember on the 12-month, look what we're coming out of on the 12-month. We're coming out of that 12-month imbalance right there. So you imagine if we can get anything like this over the next few years, look at how price reacts to the upside when it is, going up and when it has pulled back. Okay, In this particular case, it took 1, 2, 3, 4, 5 years of bearish price action. Okay, 5 years of bearish price action. We can call that the high right there. Then we can say 1, 2, 3, 4, 5, 6, 7, 8, 9 years for the pullback there. So 5 years for the pullback here, 9 years for the pullback there, and it's 3 years of bullish. Okay, bullishness to get to that point. Again, similar here, we had 1, 2, 3 years of bullish behavior, basically taking us all the way back up to where we were. So again, this was 9 years of down movement, okay, of bearish play, and then 3 years to take us back to there, and even a following 2 years to take us up higher. Okay, well, 3 years if you're counting that one. So where we are currently at, obviously, if we're counting this candle here, let's count these years together. So there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. This is the 17th year of the pullback from the very high. The 17th year, okay? And remember, the amount of years it's taken in the past to take price up, okay? We've got 3 years here, and we've got 1, 2, 3, 4, 5, 6 years here, right? So what I'm trying to highlight with this fact, because it is a fact, because we can see it on the chart, is the fact that the bullish momentum is much, much, much stronger from a yearly perspective than the bearish momentum, okay? So the fact that we've come into this 12-month imbalance, this could give us the surge to really rip to the upside. And not to mention the fact we've got trendline liquidity from a yearly perspective. All of these highs. Imagine the traders that have gone short, but they're going to have stop losses above these highs, which gives the market even more reason to tank to the upside. And also, not to mention the fact, look what low we've took out. So we actually built liquidity above this 12-month imbalance. 1, 2, 3, 4, 5. And then on the 6th year, we spiked down. Again, imagine traders that have gone long, stop losses below here. You know, they're going to be thinking this is going to be the swing low. Price had other ideas, came into the 12-month imbalance, spiked down, and obviously had a nice reaction. Big wick on the 12-month here, okay? If we compare that wick to this one here, so we had a big wick on the 12-month time frame here. We had a year of sort of nothingness. It was a bearish year, but it didn't do anything. It was inside of that whole candle. And then the following year, we really ripped to the upside. So we still have opportunity to do that because this is the candle that spiked down. Then we have that candle in between, and we've still got 7 months pretty much. Obviously, that's 6 months, 27 days. Let's just call it 7 months. We've still got 7 months for this yearly candle to close. So it really could, you know, start to go bullish. So with that in mind, we could just go straight from here because we've also reacted from this monthly imbalance too, that we can't forget about. Okay, right there. So price came into it, had a little reaction, came back down, and now we're continuing to go up. Let me just remove these areas. Okay. So what I'm trying to say is we don't have to come down here based on the fact of what we've spiked into from a yearly perspective. Okay, we have to remember the markets are fractal, so they're going to be doing similar things on all different time frames. All right, so on the weekly time frame, you can see I've got some internal bearish behavior right here. So we've got the high, the low, lower high, lower low. This is also visible on the daily time frame. Okay, like so. Now, what I am really liking about this from a bullish perspective is the fact that we've closed above this high here. And then when we did pull back, we didn't really pull back a lot. So this was the initial spike out of here. And then we've continued to do that. On a 4-hour time frame, it's much, much, much more visible as to what we're actually doing because we're just putting in higher highs and higher lows on the 4-hour. But on the daily and on the weekly, it just looks like one single move to the upside. This is why multi-time frame analysis can be very, very useful to us when we're looking at the market. Okay, so obviously that's the previous monthly high right there. So this is the new bullish 4-hour leg. Why? Because that's the most recent structure point, because that was the higher low of this structure leg. So from this low to that high, price came into discount, made a higher high, therefore this is the new leg. Okay, so what we're currently within, what price is currently within, is this 4-hour imbalance. So it could actually be finding its feet from here and skyrocketing potentially. Where could we come into? Well, first off, I want to see what price does at this 4-hour imbalance. If we just let it load. This 4-hour imbalance, I want to see what happens here. Although I do believe all of this could be taken if we are going to continue bullish. This 4-hour imbalance could just be used as a catalyst for a pullback. So in other words, price could come up to here, bump its head, and then potentially have another pullback before coming into another discount before continuing higher. Okay, because that's going to do what? That's going to entice sellers in the market. They're going to have their stop losses above this high. They might ignore the fact that we're actually bullish, which would give price more reason to continue higher to take those stop losses. Okay, that's essentially the idea of it. That's pretty much it for euro dollar. There's nothing else I want to discuss. I don't want to start going into the lower time frames because there really is no point. We've got our higher time frame areas marked on, and we know, the direction in which price is most likely to continue, which is higher, in my opinion. So let's move on to pound yen. So pound yen, we are in a few trades at the moment. Okay, so pound yen, let's have a look. So on the hourly time frame. Okay, cool. So what we're doing now on pound yen, I just need to take that off. This is the long position that we are in. So we are now risk-free on this position entirely. Okay, and we're also in another long position too, which is in profit now, I believe. And we're in a short position, which will be in a loss currently. Okay, which is no big deal, because remember, we're playing the risk to reward game. We're playing the game of probabilities. All right, so this is going to be a 1 to 3, and then the second long, if I just get that over onto this side as well, is going to be a 1 to 3 as well. So that's going to be a total of 6% if we can get these to reach TP, minus the loss, so 5% if we can get these. If we can get these to reach our targets. Let me just take these, tidy this up a little bit. So that's what it looks like from an hourly perspective. That's what we are involved in currently. Okay, we've got a long from down here. This was taken from the 1 hour imbalance just here. Okay, bringing it all the way through. Yes, price has come down and closed below this, but how I've sort of understood and developed this system particularly is understanding the fact that it doesn't necessarily matter when this happens, because when I'm looking at these areas, I'm focusing on the lower time frames. All I want to see is a fresh 1 hour imbalance be mitigated within the hours of the trading session that we trade. Okay, so that's the main idea of it. The reason why I'm not looking for 1 hour imbalances everywhere and all times of the day is because I don't want to be taking trades at midnight and all the rest of it. So it's very important to go with the flow of the market. And not only that, the London session is the most lucrative, I would say. It's got the most money pumped into the market in London session. And obviously I'm looking at New York session as well. So London and New York are the most volatile, let's say, but in a good way for us. Obviously we want to be on the right side of the market. All right, so these are the positions we're in. Like I say, this one's in profit, this one's in profit, this one's in a loss. Okay, if these two reach TP, we're going to get 6%, minus 1, 5%. So we'll be up 3% for the month in total, because we had 2 losses at the start of the month. Okay, on Monday, so the start of this week. Okay, so let's see how this plays out. let's see how this plays out. What I'm also looking at as well is this 1 hour imbalance right here. Okay, simply put. So all I do is let's do it now. Actually, all I'm going to do is put an alert on the bottom of that. Okay. And then if price reaches that area before the end of the trading session, then I'm going to be looking for shorts once more. Okay. With a systematic system, it's very, very important to not let your sort of emotions take over. To let your emotions take over, and it's important to let the system do its thing, pretty much. Okay, because again, we are playing a game of probabilities, risk to reward ratios. It's a game of maths, basically. It's a game of maths. So, and patience, obviously, but it is a numbers game. So that that's the nice thing about having a system. This is why I like to keep the results there as well. I still am gathering data. I've started to gather data in 2021 now. So December was a 5% month. November was a 1% month. October was a 10% month. So over the long haul, I do have a lot of confidence in this system. And this is why I'm going live with the system and sharing it with you members. Okay. So that's pretty much it. That wraps this live session up. I just want to say thank you for everyone that tuned in to the session. If you do have any questions, please feel free to leave them in the Discord group. We are just working a few things out now with the website. We're trying to integrate another sort of link, so we don't have to send the links in the Discord, so you can do both. So you'll be able to see the Da Vinci strategy at all times. And then our live sessions, meaning Henry's and myself's live sessions, they'll be separate to that. So, but for now, we'll continue to put the links in the Discord just until we get that sorted out. I believe we are in contact with the website developers. So hopefully that can be sorted as soon as possible. But nonetheless, we're making it work. So that's the main thing. And we're still going live and taking trades, which is also very, very important. Okay, so yeah, once again, thank you for watching. I'm not going to blabber on anymore, and I'll see you in the next live session today, which will be 3:30 p.m. So trade safe and keep an eye out on the trade alerts for any updates, whether that might be going break even or even entering another trade. Just keep an eye on that trade alert section and we will be good. So thank you for watching once again. Take care, and I will see you in the next live session. Thank you, everyone. Bye-bye.